Hi, in this video, let's discuss about how we should generally approach a admission problem. Okay, to solve an admission problem, a partnership admission problem, there are certain basic things that we need to check out and then calculate. That's what we're going to discuss about in this video. Okay, now let's say whenever a new partner is getting admitted into a firm, we have to calculate the new profit sharing ratio. So that is mandatory because already there are two partners who are sharing profits in the old ratio. When a new partner comes in, we have to calculate the new ratio. There are various methods of calculating new ratio, which we will see in another video. Okay. The next step is treatment of goodwill. We have already discussed about various cases of treatment of goodwill in the previous videos. So when it comes to goodwill, there's one more point that I would like to include. You will come across two different goodwills. One is old goodwill, another one is new goodwill. When I say old goodwill, that's already appearing in the books. For example, there will be a goodwill that will be shown in the balance sheet. That we call it as an old goodwill. And there will be a goodwill that an incoming partner is now bringing in. That we call it as a new goodwill. So how are we going to treat both? That I'll again explain. Okay. The third thing is, what we're going to do is, we're going to revalue the assets and liabilities. Why should we revalue the assets and liabilities? A new person is going to get into an existing firm. So it is very, very important what is the value of our assets and liabilities at this point of time. So the partners will decide to value their assets and liabilities. By doing so, if there could be a scenario where the assets might increase or decrease. There will be a scenario the liabilities might decrease or increase. As a consequence, it might result in either a profit or a loss. So the partners will revalue their assets and liabilities at the time of admission. That will be done by opening a revaluation account. Okay, we will also see how to open a revaluation account, how we should post and find out the profit or loss. Again, I'll explain that later in another video. Okay, the next thing is transfer of accumulated profits and reserves. I think you guys should be knowing what a reserve is all about, or profit, but let me just tell you, okay, any firm or a company for that matter will not distribute the entire profit they earn. They will reserve or keep aside a portion of their profit as undistributed profit. That will be shown in the liability side of the balance sheet. Now, because a new partner is getting into the partnership firm, is getting admitted, the existing partners will decide to distribute the existing reserve among themselves. So all this will be done in their old ratio. So we will be seeing what entry will be passed when they distribute all the accumulated reserves and profits. So what are the different reserves and profits we will come across? These are the general things that you will come across in your problem. One is general reserve, the other one is profit and loss account, workman's compensation reserve, investment fluctuation fund. Everybody should be aware what a general reserve is. It's a reserve generally created. It's the undistributed profit set aside. A profit and loss account, you will have a credit balance as well as a debit balance. What does a credit balance means? If it's a credit balance, then it is shown in the liabilities side of the balance sheet, meaning it is a profit. And similarly, if the profit and loss account is shown on the asset side of the balance sheet, we say it has a debit balance, which means it is a loss. So be it a profit or a loss, it has to be divided up. If it's a profit, it's divided among the partners. If it's a loss, then the partners contribute towards the loss. We will see what entries to be passed in that case. The third reserve is workman's compensation reserve. So see, if you come across, there will be like various reserves created. Okay, general reserve is something which is very general, for it's not created for any specific purpose. But other reserves like workman compensation reserve, they are created for some special purpose. The name itself tells you it's for workmen. So any particular problem with the workmen people, if they have any claim, that will be met out of this reserve, because this is created mainly for the benefit of the workmen. So any problem, any future claim will be met out of the reserve. Okay, the next thing is investment fluctuation fund. The firm would have made some investment so that it will get some profit or interest or whatever. So for that purpose, it will create an investment fluctuation fund. If the firm makes an investment, it may result in a profit or a loss. Okay, in case of any loss, it will be deducted or met out of the fund. In case of any profit arising out of that investment, that will be again added to the fund. So these are specific funds created for a specific purpose. Any expenses will be met out of the fund. Any income will be added to the fund. There are various cases in passing entries regarding this, which we will see in the next video. Okay, so generally these are the procedures or steps that you should be following in approaching a normal admission problem. Okay, I repeat, you will calculate the new profit sharing ratio of all the partners. You will treat the goodwill, so you will check whether there is an existing goodwill in the balance sheet, and you will also check the new goodwill. So when it comes to existing goodwill, generally existing goodwill is written off among the old partners in their old ratio. Because we have seen in our old videos, new goodwill is always divided among the partners in the sacrificing ratio. But whereas old goodwill is always written off in the old ratio. The entry goes like this for the treatment of old goodwill. Old goodwill, as I said, it's the goodwill that is given in the balance sheet. So we debit partners capital account. It could be A, B, how many of our partners we have? Partners capital account debit to goodwill. So which means it is written off among the partners. This is in the old ratio. But whereas the new goodwill, which we call it as a premium for goodwill, that will be divided among the partners in the sacrificing ratio, which we have discussed enough in the previous videos. So this is an entry pass for the old goodwill, which is nothing but the goodwill appearing in the books or in the balance sheet. So the new goodwill, sacrificing ratio. And as I said, we'll see revaluation account later. All the reserves, all these reserves will be divided among the partners in the old ratio. Because these are existing profits, so the existing partners divide among themselves. So these are general procedure that you will follow in completing a normal partnership admission problem. Hope you guys are clear with all these steps. The next future videos will explain in detail about revaluation account, how to treat all these reserves specifically. Thank you so much. If you have any doubts, please write to me at academicsforyou@gmail.com or put your comment below. Subscribe for more videos.